I think the altcoin, I think some of the applications in crypto are undervalued by a factor by multiples. I think you could see hundreds of percent returns in some of the strongest DeFi primitives, some of the new assets that are emerging. I think there's plenty of explosive growth in that space. These DeFi apps, they're $1 billion, they're $2 billion, they're $3 billion. They could be $10 to $20 billion. And I wouldn't be shocked.
Sometimes, the biggest opportunities don't arrive when the market is making headlines. They emerge quietly, while most investors are still looking in the wrong direction. That's exactly where Matt Hougan believes crypto is today. While Bitcoin has dominated the conversation for years, some of the most compelling opportunities may now be developing far beneath the surface. In parts of the market that many investors have either ignored or completely written off, Hougan isn't turning bearish on Bitcoin, quite the opposite. He still expects Bitcoin to deliver excellent long-term returns, but he believes something important is changing. As Bitcoin matures into a trillion-dollar asset, its path higher naturally becomes steadier and more methodical. Meanwhile, a new generation of blockchain applications could be entering the stage where valuations no longer reflect their actual growth potential. According to Hougan, some of these projects aren't just undervalued, they're undervalued by multiples, with the potential to grow many times over if the next phase of crypto adoption unfolds the way he expects. What's driving that conviction isn't hype or speculation, it's a fundamental shift taking place across the financial system. Wall Street is moving on-chain, institutions are racing into tokenization. Stablecoins continue to expand even during a difficult market, and platforms like Hyperliquid are demonstrating that decentralized finance is evolving into something far bigger than the last DeFi cycle. If Hougan is right, the biggest winners of the next bull market may look very different from the leaders of the previous one. But which sectors does he believe are positioned to benefit the most? Why does he think the market still hasn't priced in what's coming? And why could this cycle reward a completely different group of crypto assets than many investors expect? We'll break down all of that in today's video. If you enjoy in-depth macro and crypto analysis like this, make sure to hit the like button, subscribe to the channel, turn on post notifications so you never miss an upload. And let us know in the comments which part of the crypto market you believe has the biggest upside over the next few years. Now, let's hear what Matt Hougan had to say.
I find this crypto winter so interesting because in previous crypto winters, we didn't know what would drag us out of it, right? In 2018, no one was talking about DeFi summer. It hadn't entered our mind yet. In 2014, no one was talking about Ethereum. In 2022, no one was hoping for an ETF. We couldn't see what was going to drag us out of the bear market. The really unique thing about right now is we could see it plain as day. As you mentioned, it's the intersection of on-chain and traditional finance. And the reason we know that will drag us out of this bear market is that, one, it's already happening, right? Stablecoin AUM is up significantly despite it being a bear market. Tokenized stocks are growing something like 600% a year despite it being a bear market. JP Morgan, Vanguard, BlackRock, every major firm is hiring into this space, despite it, quote unquote, being a crypto winner. So we already know people are positioning this way. And if you look underneath the surface, and we could talk about this, you can see a few projects that are the green shoots of this bull market. You look at Hyperliquid, up 100% plus on a year-to-date basis, printing significant revenue. Hyperliquid is a great example of on-chain and traditional finance, right? It's a decentralized exchange increasingly serving real-world assets like oil, silver, and the S&P 500. On the other end of the spectrum, you have a company like Robinhood, which launches its own chain and immediately gets to scale. I think the world wants all assets to be tokenized. The world wants finance to move over blockchain. And any project that is focused on making that happen, I think will do extraordinarily well over the next 12 to 24 months.
Basically, Robinhood and Hyperliquid are at the center of your focus for opposite reasons. So they sort of look at that problem from two different perspectives.
That's exactly right. That's why I used those two examples, because it's fun to see. We have a shared goal, which is all the world's assets. Stocks, bonds, crypto assets, private funds, pre-IPO shares, futures options, etc. All of that wants to be on chain. And you can approach this from either side. Hyperliquid is native to the crypto ecosystem, started trading perps on crypto assets, but that technology can be applied to traditional assets. And now more than 50% of their volume is traditional assets. I think that's a great example. There are other examples. You can think of Ondo, which is a crypto native service providing tokenized equities, right? That is crypto moving to finance. But my point on Robinhood is you can move the other way. Robinhood, of course, is a traditional brokerage. They've been crypto friendly from the start. Their CEO says all assets are going to be tokenized. They're positioning for that. But what you're seeing them now is really make that jump, right? Launching their own layer 2 blockchain, Robinhood chain, integrating with Morpho and Ondo and other sort of DeFi apps to really create this new on-chain financial service. This is what you see in any technological revolution, right? You saw Amazon embrace online shopping and Walmart embrace online shopping, and they sort of met in the middle. That's what I see happening here. There are going to be a lot of winners. It's not just going to be Robinhood and Hyperliquid, but I think those are perfect examples of different ways you can approach this. So if you think back to like DeFi summer and maybe the last 4 or 5 years, the big criticism of crypto-based apps are, yes, they can attract a lot of users. Yes, they can attract a lot of activity. But for a long time, none of that flowed through to the token holders. You can think of Uniswap becoming, in many cases, as big as Coinbase from a volume perspective. But the original setup of the Uniswap token, there was no fee switch. There was no buyback and burn mechanism. There was no way for activity on Uniswap to translate into a higher value for the Uni token, largely because under the previous regulatory regime, that was effectively illegal. If you captured value, the SEC deemed you a security and sued you, and that was a challenge. So they didn't. But that's changing, right? Hyperliquid is sort of this beacon showing you how it works. On the Hyperliquid platform, 99% of the revenue generated goes to buying back the Hyperliquid token. That's why it's the best performing large cap crypto asset in the world over the last year. And everyone sees that the market is rewarding that. The interesting thing I was pointing out is some of these projects, which previously didn't have value capture, now do. Right? Uniswap, increasingly capturing value, returning it to the token. Aave eliminated the separation of equity and token, increasingly focused on token value capture. Morpho also improving its tokenomics, although it has a different view sort of what to do with this. There are other examples. You can look at Chainlink going from, no revenue sort of accrual directly to the token to improving that over time. I think investors will have a really unique opportunity to buy these assets at low valuations because the market hasn't re-underwritten them and re-understood that they're now capturing a lot of value. They now look more like stocks. You can now value them on a price to earnings ratio. I think most of those assets are dramatically undervalued, and I was trying to call that out in the piece.
Matt Hougan's optimism doesn't stop with tokenization or DeFi. The conversation then shifts to one of the biggest debates surrounding this cycle, why Bitcoin hasn't delivered the explosive returns many investors expected, and whether structural changes in the market could permanently reshape future bull runs. That discussion was sparked by a thought-provoking post from billionaire investor Chamath Palihapitiya, who raised 2 potential headwinds for Bitcoin. Chamath wrote, "There are 2 problems for crypto and, specifically, Bitcoin bulls. 1. Marginal liquidity would rather speculate in prediction markets and equity markets. Marginal energy to mine Bitcoin is worth 10 to 20x if reallocated to serving AI tokens. These changes feel structural, but I could be wrong. Hougan agrees with part of that argument but strongly disagrees with the other half. Here's why."
Look, I think he's right on the first one. It's absolutely the case that sort of the attention economy is seduced by what's happening in AI. They're attracted by what's happening in robotics. They're certainly distracted by all the other exciting things that are happening in the market. And that wasn't true in crypto past. So that will make the bull market slower and more methodical for Bitcoin than it was historically. I think he's just right about that. The second piece about Bitcoin miners redirecting compute activity to the AI space, I think doesn't matter at all. I'm not near-term concerned about Bitcoin's security. Like I agree that we need to think about it long-term, but the amount of hash rate is really significant. I think it's sufficiently secure. And of course, mining has a sort of self-correcting mechanism to adjust difficulty to account for the amount of compute going into that market. I don't think AI is going to suck up all the Bitcoin miners and all the compute activity in the world. I think Bitcoin will be just fine. So he's right on point one. And that's one of the reasons this bull market will likely not have as much explosive upside as previous bull markets. But he's wrong on number two. It's like irrelevant. It's a cute statistical fact. But it won't interrupt Bitcoin's security, which is what he's getting at.
When you say that you don't see the next bull market to be as explosive as previous ones, you mean just for Bitcoin or also those strong altcoin projects that you have been discussing?
Great question. I mean, just for Bitcoin. I think the altcoin, I think some of the applications in crypto are undervalued by a factor by multiples. I think you could see hundreds of % returns in some of the strongest DeFi primitives, some of the new assets that are emerging. I think there's plenty of explosive growth in that space. It's just Bitcoin specifically. And look, I'm very optimistic about Bitcoin. I think it will generate a great risk-adjusted return, but it's $1 trillion plus asset, and it takes a lot of money to move $1 trillion plus asset. I think it's just a slower, more methodical march upwards. But I do think, yeah, to your point, these DeFi apps, they're $1 billion, they're $2 billion, they're $3 billion. They could be $10 to $20 billion, and I wouldn't be shocked. So that's the kind of opportunity. There's no guarantee, but that's the scale of the opportunity that I see in that space. I think the genie's out of the bottle, right? BlackRock's largest ETF is now a crypto ETF. Goldman Sachs is hiring in tokenization. JP Morgan is hiring in the blockchain space. NASDAQ, NYSE, et cetera, are moving towards 24/7 tokenized markets. We'll still have 2 years under the current regulatory regime at a minimum, which is extraordinarily pro-crypto, which is extraordinarily prediction markets, which is extraordinarily pro-blockchain. I think the industry will be too big to kill 2 years from now. And so the sort of Gary Gensler style Elizabeth Warren rollback just strikes me as extraordinarily unlikely. I think the analogy is to something like Uber. Uber exists in a regulatory gray zone, but it got large enough that it could never be put back in the model, right? It sort of escaped that degree of regulatory pressure. But make no mistake, the industry will do better if Clarity passes. We should pass Clarity. If we do, I think it's the immediate shotgun start of a new bull market in crypto. And if we don't, I expect some volatility. But I don't think it's over for crypto because I think there's just too much momentum on stablecoins and tokenization. You won't be able to pull those back in 2 years. They will have achieved escape velocity.
And what are the chances that you put now on the passage of the Clarity Act at the moment?
Yeah, I have really unhelpful comments, which is, I don't know. I think Polymarket's at 40%. That probably feels about right. The thing about 40% is when people hear that, they assume it's not going to happen. That's not what percent means. 40% means in 4 out of 10 cases, it will happen. The best thing you can say for the Clarity Act is it has had 1,000 chances to die, and it hasn't died yet. Things that don't die and persist despite like a lot of existential threats often end up succeeding. So maybe I'm cautiously optimistic, but I don't think Polymarket has it wrong. I think it's like a 50-50 toss up. And I guess we'll find out over the next handful of days.
Matt Hougan's message throughout this interview is remarkably consistent. Bitcoin remains one of the strongest long-term assets in the world, but investors expecting another cycle of effortless 20x or 30x gains from $1 trillion asset may be looking in the wrong place. As markets mature, opportunities naturally migrate toward the next layer of innovation. That next layer, according to Hougan, is the convergence of blockchain technology and traditional finance. Stablecoins, tokenized securities, decentralized financial infrastructure, and blockchain-based applications are no longer experimental concepts. They're increasingly becoming part of the financial system itself. And as regulations improve and institutions continue building, projects that successfully capture real economic value could see dramatic revaluations over the coming years. Perhaps the biggest takeaway is that crypto is becoming increasingly driven by fundamentals instead of speculation alone. Revenue generation, sustainable business models, value capture, and real-world adoption are starting to matter far more than they did during previous cycles. If that trend continues, investors may need to evaluate digital assets much more like traditional businesses than purely speculative tokens. Whether every prediction plays out exactly as Hougan expects remains to be seen. Markets always surprise us. But if his analysis proves correct, the next major winners may not simply be the biggest names everyone already owns. They could be the projects quietly building the infrastructure that powers the next generation of global finance. If you enjoyed this analysis, don't forget to leave a like, subscribe to the channel, and turn on post notifications so you never miss our latest videos. Share this video with anyone interested in where crypto could be headed next, and as always, thank you so much for watching. We'll see you in the next video.